Hello out there. Hello again. Welcome to today's live. I am excited to be with you. My name is Lunta Di La Paulo, and I am the founder and managing director of Yeto Accounting and Tax PLLC. We have launched this series of lives that we hope to be about 10 minutes long, approximately every single day, to educate you, business owners, to give you the right information so that you can make valuable and important business decision out of knowledge, expertise, and wisdom, especially. Okay. And we started this journey talking about exit planning. And as always, I love to start these lives by getting a common ground between you and me. And that common ground is an understanding that whether we like it or not, we know 100% of us business owners are gonna need to exit from our businesses. We know it's 100% guaranteed, it's 100% unavoidable, it's 100% inevitable that we're gonna exit. But for a lot of business owners, the reality is we never ever think about the fact that eventually we're going to exit, whether through death or through sickness or through retirement, through natural course of life, or any other lives life's reality, right? A lot of business owners seems like we're closing our eyes to the reality that at some point we're going to need to exit. And for those, even for those business owners who think about that eventually I'm gonna exit, or for the business owners who their exit is a little bit closer than many other business owners, they are not actively really taking steps to make sure they exit from their business on an optimal basis, right? And for us, I'm gonna talk about us. I don't know what other folks are doing out there, okay? But I'll talk about what we consider an ideal and optimal exit situation for business owners. We like to see three things taking place for a business owner when they exit. Number one, we want them to exit on their own terms, okay? When somebody exits from their business, it doesn't mean even if their company is priced at $2 million, they're gonna be getting $2 million on the closing table. That seldom happens. In fact, rarely happens. Okay, so the terms of the deal structure defines what the seller gets at that closing table. Okay, so we wanna, you've worked hard for your business, you've built it from the ground up, and it's something that you cherish. It's your legacy that you want continuing, and when you exit, you want to get the most out of it, right? So we want you to get out of your business under your terms. The second thing we want you to get out of your business is your own price, right? You don't want to be selling, exiting from your business at very much discounted price, for example. So, and for you to get a premium, there are certain things you need to have and put in place for your company to command a high premium in the marketplace. And number three, we like for business owner to exit on their own timeline. It's very important, even though we don't necessarily have a lot of controls about what could possibly happen and really, move our plans a little bit. But if we plan for our exit, we can minimize, right, the disruption in the company and in our personal life when an exit event actually takes place. Okay, so and today I want to share with you, that was a little bit of a longer introduction, but today what I want to share with you is a topic on the subject of, do you know what your company, your business worth is? So we're really trying to address the question, we're really trying to address the question of value. What's your company's value today? I'm not talking about, you plug in some numbers in an online calculator that spits out some, business value. That's not how in practice actually happens. What we prefer to do is to take an objective look into your company and we run our analysis, we run certain methodologies, right? We apply certain methodologies in our analysis to come out with what a reasonable buyer in the marketplace would be willing to pay for the company. What a serious buyer could potentially pay for your company at its current stage. Okay, and that's not all, right? You really need to think about two parts of this question. Number one, your current value, but also what are you looking to get out of the company. Let me give you an example. If we run our methodology, whether it's public comps or private comps or DCF or liquidation value or asset replacement value, whatever methodology we'll be using to develop your business valuation, the important point, the important element for you to take away is the fact that your business value could be arranged, but a serious buyer might not actually be willing to pay that value because of certain problems your business could have that you haven't addressed. And therefore, they're going to be asking you a discount because they want to be paid to fix the things that you did not fix in your company. Okay, so it's very important to think about this part of the business valuation. Number one, right? What's the company's value today? Okay, and number two, right, where you're moving towards, right? Whether the business value, if it's sold and somebody gives you approximately the price based on today's valuation, will it give you enough cash that you need for your future needs, whether it's retirement, launching another business, investing in other assets, or traveling the world, whatever that goal is. Okay, you need to think about that, because if there is a significant gap between your business value here and what you're looking to achieve on the other end, you really need to work hard to reconcile both. Let me put some numbers here to help us. If your business value, okay, it's appraised at $1 million today, and you need to have $2 million in your bank account in 5 years for your retirement, then we need to figure out a way to move from that $1 million today to $2 million in 5 years. What should we be doing in your company today? What can we do in your company today? What gaps should we solve for to get the company at the $2 million plus valuation, right? So very important consideration, very important element that you need to think about as a business owner. And as I said, we're hoping to keep these lives about 10 minutes long. And we are in our 10 minutes mark. I'm going to pause here. Tomorrow, we're going to continue, okay? Rock and roll. But before I go, I want to share with you a gift, okay? If you look on the right uh, top corner here, there is an ebook cover. I've written this ebook to help you business owners to get good information to avoid expensive mistakes that can cost you a fortune when you exit. So if you want a copy of this ebook, just click. I'm gonna put here the information where you can download that, right? Go to www.luntadilapaulo.cpa.com/seven exit mistakes. Okay. And it's rolling there. You can see the information. You can download the information there. And if you need help from us, don't be a stranger, reach out to us. Our email address is also underneath here, hello@sevenexitmistakes.com. You can reach out to us. Somebody from our team will respond to you, and we're here to help you. And sometimes people think it's about us. It's not about us, service provider. We're just here to help you, to serve you. That's why we're service providers, right? And even if you don't want to work with us, we still want you to find somebody who can actually help you with your needs. Exit planning is not something you should be leaving for tomorrow. You need to address it today. whether you're launching your business today or in 10 years, in 20 years, or you've been running your company for some times now. Okay. So I hope this was valuable to you. Have an amazing rest of your day, and I will see you tomorrow. Cheers.